Hello, welcome back to my YouTube channel, and in this episode I'm going to talk to you about I'm going to be teaching you a I'm going to be introducing you to smart money concepts and how to really approach market structure along with order blocks or supply and demand zones. And you just have to, these are very simple concepts, but people tend to overcomplicate things. And most times when you look at the chart, there tends to be a lot of order blocks, and then you don't know which one to pick, and you don't know what order block works and what order block doesn't work. And in this video, I'm going to be demystifying that for you. So by the end of the video, you should be able to have a total understanding of market structure. You should be able to have a total understanding of order blocks, what they are, how to use them, and then you should be able to have a very simple strategy that actually works for you to be able to trade with. So if that sounds like something that you're interested in, I'd like you to stick around and watch this video to the end, because at the end of the video I have a very special giveaway that is going to be coming up, and you're not going to want to miss this giveaway. So let's get right into the video, and I hope you stick around to the end. I'm going to keep it as short as possible. So when you look at this, you can see I already have drawn up on the chart. You can see this is an uptrend. This is the market that is trending upwards, and when the market is trending upwards, what the market is simply doing is the market is protecting the liquidity on the downsides, on the lows, and taking the liquidity above. You can see the market taking out the liquidity above. And whenever you see market create a structure in a trend, this is a structure, this is structure, this is structure, and don't forget, behind structure there's always liquidity behind structure. So it's just like in the battlefield, soldiers will always tend to hide behind things that can cover fire and all that. So there's always liquidity behind every market structure that you see. Now whenever you see the market rally and take out any structure, just like the market has taken out this structure that I just marked in X, you want to realize that there is an order block or a demand zone at the base of that rally that took away the structure. Now if any structure is not broken, we don't consider the order block to be a valid one. Now the order block, in my opinion, has to break structure. If structure is not broken, then you don't have any reason going to that order block to sit around and try to place a trade around those areas. You have no reason to do that. So now when the market breaks structure, you want to wait for the market to come back right into those order blocks before looking for trades to the upside. And oftentimes I prefer to see the market break structure on the daily and the 4-hour time frame, because I'm a long-term trader and I prefer to see the market break structure on the 4-hour or the daily time frame. When the market breaks structure on the 15 minutes, it doesn't really mean anything. It could just be the correction of a higher time frame swing and all that. So you don't want to be trading breaks of structure on the 15-minute time frame. You want to wait for the market to break structure on the 4-hour or the daily time frame, and then you want to work with that. So getting back to it, when you see the market come off a demand zone and break structure, you want to mark that demand zone as your area of interest or your point of interest and wait for the market to come back right into that zone. But the market comes back into that zone, this is where you start looking for opportunities to get involved, maybe through a lower time frame break of structure. You start looking for opportunities to get involved and having the most recent swing high as your target, going into the trade or moving forward into the trade. Now when that happens, you also want to realize and reckon with the fact that there's what you refer to as breaker blocks, as ICT calls them, or at the same time there's a way for those who trade supply and demand, for every single time the market takes out a supply zone, oftentimes it's most likely going to turn that supply zone into a demand zone and then use it to push price forward, and vice versa too. Whenever the market takes out a supply zone, it's most likely going to come back and turn that supply zone into a demand zone to continue to push price in a certain direction. So that's just that about that. So you want to look for zones that are giving us breaks of structure, supply zones, demand zones that are giving you breaks of structure, and then you want to align yourself with those zones. So let me quickly take you to a real life chart and then show you this on a practical example, because I'm not loving the whiteboard. So let's move over to real live chart. Now this is an analysis I did some time ago, and looking at Euro Swiss franc. Euro Swiss franc is not a pair that I actually trade. because it's most times it's always choppy and all that kind of nonsense. So you see the price, we are trending down nicely. We are trending down, and all of a sudden there's a break in market structure after the long trend to the downside. Now, the break in market structure, yeah, we came to collect the liquidity. We're sitting below these lows here, but that's not what we're talking about at the moment. So you see, we've broken structure to the upside. And when you zoom in a bit closer, you want to notice that this break of market structure here was caused by this order block that I marked up here. You see this order block here, that's the last down move for this entire move. And now there's a way you can, if for example this was to be, most traders have a hard time differentiating between a break of structure and then grab of liquidity. Of course, we know that, for example, there's liquidity sitting above this level here, but you want to notice that if you look closely at this candle, here, you'll observe that this candle actually came up and pierced the liquidity here and triggered the buy stop orders. And when the market triggers the buy stop orders, it actually came right back down. So this candle here is what did the job of grabbing the liquidity, and then the follow-up candle actually came closed above this level. You can see it pierced it. This candle pierced it, didn't close above. This one pierced it eventually and closed above, and this one even closed higher. Now that we've closed higher above all that, we are sure that there's enough bullish momentum coming into the market and that this is actually a valid break of structure. And the valid break of structure is going to confirm more if we have this level actually holding this order block here, this order block actually holding up that structure. So that aside, we trended down nicely, and we just corrected our way back into this order block. Just like I was trying to show you, you want to see the market push up impulsively or take off from a particular zone impulsively and then correct its way back into that zone, of course moving away from the zone with just 1, 2, 3, 4 candles, and then coming back down with how many candles? That's about 18 bars. I think there's 18 bars in between. I don't know if it's counting that correctly, but that's about 18 bars in between. So now going up with 4 candles, coming down with 18 candles shows you that there's more bullish pressure in the market than bearish pressure, and that whatever it is in here that gave us this move likely still has a lot of orders that can give us another move. So all we have to do is wait at that zone and then take our trades, wait for the market to give us a lower time frame break of structure that we are going to work with. And I think this is exactly what I am waiting for at this zone. Now, if I'm wrong, I want to get out quickly at this level. I want to get out as quickly as I can, and I'm not going to hold on to the trade emotionally or things like that. So this is a break of market structure, and this is what we want to work with. So looking at this scenario here, you can see this is a very, very simple strategy. Identify a push away from an area and mark up that zone. This is a demand zone. It could be an order block, but this is a consolidation. This is a tiny bit of consolidation that gave birth to this entire move here. Now we're back at this zone again. So that's that about that. Now we move over to GBP USD. Let me show you something. All right. So this is GBP USD. Clearly, we're in a long-term bullish trend, and obviously the market has constantly protected. You can see from this low, this here, and now most recently this. And now the market is reacting to this zone again and pushing away. So the market has constantly protected the liquidity on the downside while taking out the liquidity above, just like we had during the example that we're given. This liquidity here has also been taken out. If you look closely at that, we'll see that we've wicked out and taken out the liquidity at that level. Oh, sure. We've wicked out and taken the liquidity away from that particular level. So what we want to do is to dive deeper into the chart. We have this high here. We have this high within the market that has not been tested. We have the market hasn't tested that high. I believe the market is still going to run up into these highs and take out those highs before we start seeing very, very major drop in price. So that is what I believe. I could be wrong, but then this is what I'm looking at the moment. So sorry, what the fuck is that? Okay, now back to the video. So now looking at this, we want to come down to the lower time frame so we can have a clear picture of what exactly it is that we're looking at. I remember that order blocks is always a down move before an up move, or an up move before a down move. So now when you see a wick here, when you see a wick form, a wick is usually an order block on a lower time frame. So this is a daily time frame, and when you mark this wick up, if you go down the time frame, you're going to see the down move before the up move. So this is an order block for us, and as you can see, the market came nicely into that order block and then respected it. And just like we talked about, we have a break of market structure within this area here. You see, within this area, we have a break of market structure as a result of this order block in here. See that? Beautiful order block, and then break of market structure. Let me mark up the break of market structure. So this is a break of market structure within this zone, and if you go down to the 4-hour time frame, you clearly see what I'm talking about. So this is the last point of structure within this market. So let's mark that up as break of market structure, and then you can see that there are now structure, we've taken this one out, and of course we have buy stops sitting above here, we have buy stops sitting above this level, and then we've taken out the guys here, taking out the guys here, and for the very first time we protected the liquidity below this low by the market not coming down to take out these guys anymore, and instead we have a break of market structure on the upside. So what that means is that we should be looking for the market to trade back into the zone in the coming week, give us a lower time frame break of structure, and then we start to look for longs. And given the fact that we've taken out this this high here, the next high I should be expecting the market to take out is this one. So if I was to take a trade here, get involved at this level, stop loss right below this level, the first target will be this high here, expecting the market to take out the liquidity, the buy stops, and run the stops above that high. It's just about 1 to 4 risk to reward, and of course we have a whole lot of imbalance within this level here, and hopefully if the market is able to trade right back into this zone, into the supply zone, or into this order block up here, it's going to provide a very, very beautiful trade. If I'm holding a certain portion of the trade left, it's going to provide a very beautiful trade, and ultimately we're going to see probably a sell-off, coming into GBP USD in the coming weeks or the coming month. I don't know, but for now we are still going to remain bullish. We're going to continue to remain bullish, and if for whatever reason there's enough momentum and we decide to target the highs all the way to this point, that won't be a bad trade either. But of course I'm not going to be looking to hold that all the way. And it's going to be absolutely insane if you just take one trade and then expect to hold it all the way. You should be booking profits along the way, like pay yourself along the way. That's the ultimate way to make profits in this business. So as you can see, this is my bias, and this is how I've come to this bias here. We have a break of structure, we have a failed low, and then I'm expecting the market to come back right into this zone, and then I get long. So I hope this video has helped you, and it has, I hope you found value in the video. And now for my giveaway. Now the giveaway is very simple. For you to enter the giveaway, I'm going to be giving away 2 free spots in our premium Telegram channel. Now the premium channel serves as a place to get free signals. The signals come in free. I actually give the exact entry points and then the management of the trade, and then there are weekly calls where we share screens within the community, and then everyone gets to see the same way I've analyzed the market here. I actually analyze that, and everyone is actually watching me analyze these trades, and where we take the trade, we take the trades in real time. And normally it goes for $45 a month, and this time around I'm actually giving it away. It's my own way of giving back to the community. And of course the reason I'm making this video is also to be able to give back to the community that has helped me. If everyone else decided to hold on to what they know, of course I wouldn't be the trader that I am today. So I'm very thankful for that, and for everyone being able to give back to the trading community, and this is my own way of giving back. And so with that out of the way, the only way to enter for the giveaway is, first of all, you have to like this video. When you like this video, I want you to leave a comment saying #premium. You can just write #premium, or you can just write whatever it is you want. Just write whatever it is you want. Say add your own comment, but make sure that it has hashtag premium attached to it. Then follow me on Instagram, because the winners of the giveaway are going to be announced on my Instagram, and my Instagram handle is going to be left in the video description of this video at Chikwado Trading, and my personal Instagram at Quadogram. So I'm going to leave both of them here, but the giveaway is going to be announced on the official Instagram handle of Chikwado FX. So be sure to follow both of those handles. So I hope you've had a good time listening to this. I had as much fun listening to it as much as I had making the video, and I'll look to see you on the next one. Cheers.